Why is the class silent? Has any of you encountered their accounting before? No, sir.
No, sir.
Why is the class silent? Has any of you encountered their accounting before? No. Okay. So we
No,
are going
sir.
to look at the format of the accounts for insurance companies, and we take some 2 or 3 questions. Then I think we are good to go, right? So yeah. I believe you can all see my screen. Can all see my screen?
Yes.
Okay, good. Now, when it comes to insurance companies, right? The taxation of insurance companies in Ghana, okay? Basically, there are 2 types of insurance businesses we are dealing with. We have general insurance businesses, right? General insurance, and we have life assurance, okay? Now, one thing you would notice is that usually general insurance is the type of insurance that we make profits from. Okay, this is where you pay premiums to them, and then when your premiums mature or where your policy mature, maybe a damage actually happens, then you get what you get paid. Let's say burglary insurance, fire insurance, marine insurance. I get in third-party liability insurance, all those types of insurance, I get in it, are regarded mostly as what general insurance. Do you get what I'm trying to say?
Yes, bro.
Yeah, so when it comes to general insurance businesses, that is how they are. Okay. That is how general insurance businesses are. So with general insurance businesses, what usually happens is that we secure a particular risk. Are you getting it? And then the insurance company usually can make profit for it. So let's say you are paying um premiums for maybe burglary insurance, and there's never a burglary, there's never a theft. Okay. Then what happens then? Then what happens then? You are paying money for burglary and they never stole from you. So what happens to the premiums?
Sir, please, it means you will not get your money back.
No, I'm talking from the perspective of the insurance company, not the anytime you are accounting, okay, never look at the client. You are a consultant, you are not dealing with the client, you are dealing with the company. So you are the company's consultant. So if people are paying for burglary and then it never happens, what happens to you, the company? Is there a gain or a loss on your behalf?
We
Oh,
can
Like
it's a
from your
gain.
loss.
Yes, it becomes a gain from your perspective because at the end of the day, that thing never really happened. Do you understand? Yes. But then for life assurance, okay, when you are insuring the life of people, no matter how it gets, definitely this one you have to pay claims. Do you understand? And one thing is that for life assurance, it's not like the short term one, the general insurance business, because that one they invest for the long term. So for that one, the interest is in their investment and not the premiums that are collected. Do you get the whole idea? Did it make sense?
Sir, please, can you come again?
I said with that one, they invest for the long term because of people's life expectancy. That one, it doesn't mean that when you just take the premium, you can make profits from the premium. Those ones they consider long term because people's lives are long, right? So the premiums they take, they reinvest it into funds, into investments. Do you understand? So it's their investment income that brings them profits, not the premiums. Do you get a distinction?
Yes, sir.
Yes, for general insurance, they can make profit from the premiums. For life assurance, the profits are made based on their investments. So for general insurance, we account for them using the premiums, But life assurance, you account for them using their investments because they invest for the long term. Does that make sense?
Yes, sir.
Yeah. Yes.
Yes, sir.
That is it. So I wouldn't want to take much of your time, but let's see the format. Usually for general insurance business, right? So let's start with general insurance and let's see how it works and let's take some questions. I wouldn't want to, because you are solving questions, I wouldn't want to talk too much, right? So let's look at the pro forma. So usually for general insurance companies, right, what happens is that I told you they make money from the premium. So their sales is like the premium, right? So do you have your gross premium received, or you can call it gross premium income. So the gross premium income is the amount of premiums you have received, right? So the gross premium income. So once you get your gross premium income, remember this is the total premiums you have received. Good. Now, if you have received these premiums, anything can also happen to you as an insurance company. True or false?
Hmm.
True.
True.
So you are going to take some of this money and reinsure yourself. Does it make sense? So we are going to less reinsurance what premiums. Does that make sense? So
Yeah.
you are going to insure yourself with what? Another insurance company. Then there are some people that this is based on accrual accounting. There are some people that may have shown interest in the policy and you would have included their income here. But you later realize that they are not going to take it up, or even if they paid the premium, they don't want it again. Won't you give them back their money? If I
Yeah,
say I won't
it,
do again, won't you give me back my money?
sir, please, it will depend on the contractor.
Yes, but if the term is that I can return your premium, won't I return your premium to you?
Oh, yeah, I will return it.
Yo.
Yes. So there are some people who won't do again. We have to return their premiums back to them. Okay. So these ones, when you take it out, you come and get something we call the net premium income. Are we okay? So once you get this net premium income, let me put this in red. So you see this net premium income, okay? Sometimes there are some people who invest, like they pay premiums, right, in advance. Do you understand? They can pay you some premiums in advance where their risks have not expired. Okay, so sometimes, let's say the way you have accruals and prepayment, you can have something that is due for next year, but that is included in this year's account. Okay, what happens is that you have to take it out of this year's account, okay, and make a reserve for it. So the same way you can have an end income or an end revenue, you can have something we call the reserve for unexpired risk. So you treat it the same way that you treat provision for bad debts when you are doing accounting. Okay, as we go along, I would go more into detail. So you see this net premium income, right? We calculate what we call the reserve for unexpired risk on this net premium income for the current year. And this reserve for unexpired risk depends on the question, but usually it is 45% of the net premium income. Please, are we all following?
Yes, sir.
But if it is for all insurance, but if it is marine insurance, it is 75% because marine is quite risky. Okay, marine is very risky. So for marine insurance, it is 75% of what? The net premium income, right? Makes sense. So now I come and take my reserve for unexpired risk. And this reserve for unexpired risk, it's just like how you treat provision for bad debt, right? You know that you calculate the provision for the year and then you compare it to the previous provision. If there's an increase in provision, it's an expense. If it's a decrease in provision, it's what? An income. So I don't want you to think about that because it can get confusing. All I want you to do is take your previous year provision, right? So the previous year reserve minus the current year, right? So take out the current year reserve from it. So the current year reserve is the one that is that 45%. Does it make sense? Does it make sense?
Yes, sir.
Yeah, so just take this and take out the previous year one from it. Whatever you have can be either a positive or a negative figure. Don't worry about it. Just put it there. So assuming the closing one, the current year was more than the opening, it will be a negative. If this one is more, it will be a positive. That's all. Are we okay? So that is it. So once you have been able to do this, add or subtract this, okay, you are now coming to what? Remember, some people's premiums might have matured, like their policy has matured. You have to pay them. Won't you pay them?
You have to pay.
You
You
have
pay
to
them.
pay them. So this is where you are now going to say that, okay, there are some people who, from this gross premium I received, their policies have matured. So you are going to settle them. So claim settled and paid, or claim settled. So these people, you are going to pay them money, right? Pay them back their money because their premiums have matured or their policies have matured. The same way, you too, you reinvested some money here. Do you remember? Do you remember you also pay some insurance company some money?
Yes, please.
They too, won't your premiums have matured? Your policy would have matured, right? So those
Yeah.
people too, they are going to pay you money. So you have your reinsurance recoveries, the amount of reinsurance claims that you have received from other insurance companies. And because this one is claims you are paying people, you can take out the claims you have also received from the other insurance companies out of this claim settled. Do you understand? Then you recognize the net amount. So it's like interest, you have interest income, you have interest expense. Sometimes it can be set off, something like that. Does it make sense? So once you have been able to get this gives you what we call your underwriting profit, but don't worry about that. From there, you now come and deduct your allowable deductions. So the general principles of deductions that you know, right, which are wholly exclusively necessarily incurred, right? So management expenses, we are only looking at the ones that are allowable. So things like depreciation, general bad debt, those things, we don't include them here. So in that case, your allowable deductions, you are talking about only your allowable deductions. Something like what? Commission to agents. You know, insurance companies, they pay commissions. So commissions to their agents, okay? Commission to their agents. Other expenses like management expenses, okay? And other allowable deductions like capital allowance. So mostly insurance taxation, okay, it's a lot like it's capital allowance heavy. Okay, so you have a lot of capital allowances. Mostly you have to go and work for it. Okay, so usually there are all other expenses, I can't write, there are millions of them. So once you have been able to less your allowable deductions from this, okay, you come and get your chargeable income from your business, or you can just add investment income, right? So if there was any investment income, you just come and add the investment income, right? And be careful of withholding tax credits because most investment incomes, like interest is on account, which you must know, dividend, rent, those ones are final. So you tax them separately. So maybe you have interest, right? You have interest, and usually it's the gross interest you are looking for, right? So if it's net, you gross it up. So if there's interest, maybe investment income from somewhere, all those things, you are going to add it and get your total chargeable income. Get your total chargeable income. So once you get your total chargeable income, you can now get your tax payable. I like to do tax payable separately or my tax liability separately. So I get my tax on my chargeable income. Get my tax on my chargeable income. Okay. Then I less any withholding tax credit. So I'm going to less tax credits, okay, from this, any previous taxes that I've paid, including withholding taxes, right? Like the interest withholding tax. I'm now coming to take this out. Then I get my net tax payable. Okay. So that is how you deal with it, but I have a caveat. You see, under section 59, subsection 3 of the Income Tax Act, right? where a resident company, how you getting it, has invested 25% or more, okay, of another resident company, and that company, the investee company, pays dividend, okay, pays dividend to company A, the dividends will be exempt from tax, right? Yes. So
Yes,
most
sir.
for insurance companies, they can bring this to confuse you. Not to confuse you. They know this provision is an anti-avoidance provision. You need to be careful. So they'll tell you that, oh, ABC Insurance invested in another company who, let's say, invested 30% in another company, and that company paid dividends. That dividend, one, you can't include it. Two, it's exempt, right? So you don't have to tax it. You have to state the provision and get the full mark. Please, have you written down the pro format? You see, I don't just write format, I explain why the format. So if you understand the format, you don't need to put it in your head. You must understand how it works. So you see, as I wrote this, you understood why they were doing what they are doing. Does it make sense? Did you get it?
Yes, sir.
Good. Have you written the format down so that we can take some two questions, then we close? Can we go? Can we go?
Bill,
Can
please,
we?
can you go to the part?
Can I go to
Some
where?
few minutes. The latter part.
Where here?
Yes.
Okay.
Thank you. Okay, thank you.
You're welcome. So we're come to take some few questions. Now, when we come to life assurance, I told you life assurance depends on what? Their investment income. Do you remember?
Yes, please.
So with that one, all you have to do is just take their investment income and less allowable deductions. There's no need, though you see premium in the question, you don't need the premiums because I told you they don't make profit from their premiums. They make profit from their what? Their investments. Do you remember? Okay, so let's take a simple illustration here. Okay, so Asada Insurance Limited, you can see. I believe you can all see. So Asada Insurance Company Limited filed its returns for 2018 year of assessment with the Domestic Tax Revenue Department of the GRA on the due date. An examination of the returns showed the following information. So we have all the information here, right? So reserve for unexpired risk is calculated at 45%, and the reserve created for the previous year was 200,000. The company's accounting date ends on 31st December each year. Included in general expenses is depreciation of 19,000 and taxes paid of 10,000. Capital allowances agreed with GRA amount to 32,130. The chargeable income of this business. All right. So this is general insurance business, which we all have seen. So what's the name of the company? Aseda Insurance Company Limited, right? You underline it nicely. Then we say, well, computation of chargeable income. Computation of chargeable income for the, which year was that? 2018 year of assessment. Which basis period? The basis period is the period we are accounting for 1st of the 1st 2018 down to the 31st of the 12th 2018. So that is done, right? Then we bring our currency figure. Good. So once we have been able to do this, now we start with what? Our gross premium income. Did we have gross premiums received?
Yes, 800,000.
So gross premium income It was 800,000. Yes, so 800,000. Then we less. Was there any reinsurance recoveries?
Yes.
A reinsurance premium, sorry.
204,000.
Okay, so we also have to reinsure ourselves, right? Was there any premiums that we returned back to clients? Was there any premiums returned?
Yes, please.
How much?
11,400.
11,400, right? So we have to add these two and take it out of the 800,000. Does that make sense? Are you getting it now? So we take our 204,000 plus 11,400, and that's 215,400, right? So this 215,400, we are going to take it out of the 800,000 to now come and get our net premium income. So that gives us a 584,600. Okay, 584,600. Okay. And that gives us what we call what? Our net premium
Bill,
income. Yes, please.
this uh, reinsurance premium. The premium paid was 130. The 204 is the recovery.
Oh, okay. So who gave me that figure? Who gave me that figure? I think that was a recovery, eh? No problem. But I hope you all understand. The premiums that you pay, the recovery is how much they paid you back. So reinsurance premiums paid. Okay, that's what you're looking for. So the premiums were how much? You said it's 130, eh? Okay. So 130 plus the 11,4. 141,400, right? Is that so?
Yes, 141,400.
Okay, so if we take the 800,000 out, we have 658,600. Okay, which is our net premium income. So now we go to our reserve for what? Reserve for what? Unexpired risk, right? Okay, reserve for unexpired risk. So was there a previous year reserve? How much was the previous year reserve? Please read the question, read the footnotes. You see there. How much was the previous year reserve?
200,000.
Yes, it was 200,000. So we take our previous year reserve. Then now we less the current year reserve. So current year reserve, that one they will never give it to you. Always any provision you calculate in accounting, you calculate for the current year. So the current year reserve, we said what? Until you are told is 45% of the net premium income, right? So in that case, what do we get? And that's 296,370, right? 296,370. So I told you is this minus that, right?
Yes.
So since it is this minus that, if we just subtract, you have a negative 96 or 370. No, so okay, good. So that's all. So our 658,600 minus 96,370. And that's 562,230. 562,230, right? So that 562,230. Okay, good. So now, was there any claims paid?
Yes, sir.
How much claims were paid?
361,000.
Okay, was there
This is
reinsurance recoveries? Was there any reinsurance recoveries?
Yes, please.
How much?
Yes.
204,000.
Okay, so let's do it this way. Claims paid are expenses, so they'll be negative. And reinsurance recoveries, this is where people usually get it wrong. So claims paid is negative, right? Then this is positive because you are receiving. So you get a negative 157,000. I hope that makes sense. So we end up with 405,230. Is it clear? Are we there? So now we come to our allowable deductions. So allowable deductions. Okay. So let's look at our expenses that we can allow. We have commission to agents, right?
Yes.
So how much was our commission to agents?
3,100.
That is how much? 3,100. Okay, 3,100. Okay. Then we had general admin expenses, right? No,
Yes.
so yes, but inside the
Yes.
general admin expenses, there were some disallowed expenses. So the whole general admin expenses was 59,000, right? But in there was expenses that are not allowed. We have to take them out. So there was depreciation of 19,000. Look at the footnote. Disallow it, meaning take it out, right? So
Yes, sir.
that depreciation, we have to take it out. Taxes paid of 10,000. Taxes paid are excluded expenditure. Take it out. Okay. So we have to what? Take this one out. So this gives us what? Is it 30,000? Is it 30,000?
Yes,
So
30,000.
it's 59 minus 29. 30. Okay. Was there any other expense? Was there any other expense? No, there wasn't. But was there any other allowable expense we need to bring?
Yes,
It's
capital.
right. Thank you. Capital allowance. Capital allowance is allowed. It's an allowed expenditure. So capital allowance, how much?
32,130.
Yeah, so this was agreed with GRA 32,130. So we have to add this up. So 3,100 plus 30,000 plus the 32,130. 65,230, right? So 65,230 becomes what? Our allowable deductions. We take it out, and what do we get? So 405,230 minus that. We have 340,000, right? No, so this is like your chargeable income from business. Then you add your investment income or add other income. So was there any investment income? Was there any investment income? Yes, there was. So interest on T-bills, right? And dividends. But dividends are final taxes, so you tax them separately. I hope that makes sense. I believe we have interest on T-bills and dividend received, but dividend we tax it separately. Do you all agree? So how much is the interest on T-bills? Please ask questions. So if you don't understand anything, I did for you. Is it clear? No dividends, we tax it final in Ghana. So total chargeable income. So what's our total chargeable income? 344,500, right? Is that not so? Is that not so? So now let's get our tax liability for this guy. So getting your tax liability, we get our tax on chargeable income. Which becomes what, 25% off the 344,500. And that's 86,125. But that is not all. We have to less any previous taxes paid, right? So tax credit. There was some tax paid previously. How much was the tax that was already paid? How much was the taxes paid?
10,000.
10,000. So that 10,000, we have to give it a credit. Then we have withholding tax credit for what? For the interest. You know that because you have interest, you have to get credit for it, right? So what's the credit? You know, interest is 8% on account. So 8% for the 4,500, you can get credit for it. So 8% times 4,500, that's 360. So you have 10,360, right? As the total credit you are going to get from that. And then that gives us our net tax liability, right? Which is how much? So 86,125 minus 10,360. You end up with 75,765. 75,765, right? And then based on this, we had other taxes, right? Other taxes. So we had a final withholding payment. This dividend will be taxed separately, right? So dividend withholding tax, 8%. So I'll just take 8% off the 15,000 because it's a final tax. You tax it, but here it was gross, so it hasn't been taxed yet. So 8% of the 15,000 is 1,200. So these are other taxes that were in the scenario. So how difficult was this? I hope I didn't complicate issues for you. Any question?
Bill, please, if the question is silent on the interest, do you always assume is the amount in there is the gross amount?
Yes, if it's net, they'll tell you.
Okay.
And if it's net, you have to what? Gross it up, right? Because you're going to take a credit for it later on. Yeah, so
Okay.
yeah. Any question, please ask questions. So
Bill, please, can you go up to the top?
okay.
Hey, if anyone is not writing it, I just want to take a shot.
Okay. Okay. So I don't know if anyone has a question, then we can tackle a more somebody will say a more disturbing one. So that we can tackle a more disturbing one. Oh. Don't even know if that one is a more disturbing one. I'm waiting. Oh, question time.
Bill,
Question.
please, you can come down a bit.
I'm coming. My PC. This thing is freezing. Hold on, small. Start it. So I can calm down small. Where?
Yes.
Is it okay? Is it okay?
No, please scroll up. Hey, is it up or down? I want the latter part.
Here.
No, not the. Okay. But please, will you share the question and the solution with us?
Copying it will be a problem. I'll try.
Okay. Please, the last part.
This is the last part.
There's some down there. Yeah, I think.
Here. Is it here?
No, the solution, where the solution is.
That's where I am.
Final
Yeah,
part of it.
this is the final part.
No, there's some missing. Okay. Okay, per my screen, I can't see the latter part. I don't know if that. Okay, that's fine.
Any question?
Thank
Welcome. Any question? Any question? The class is quiet too. Okay, let's take one and let's close. Why is this thing freezing like this? I think somewhere March 2025 they brought one. Let me check if it's that tight. Yeah. So let's see. I think that was the date they brought insurance in the new syllabus for the first time. And it looks but she knew. So look at this question. I think this was question 1B. So Premier Insurance Company Limited, located at Koforidua, submitted the following accounts for the year ended 31st December 2024. So we can see all this, right? So they've given a breakdown of the commission to agents, general admin expenses. We have interest on bank deposits, gross income from insurance consultancy services, dividends received, net, reserve for unexpired risk for the previous year, right? And we are doing for 2024. So commission to agents, we have casual commission agents and we have unnamed commission agents. So they've given the different commissions to agents. We have general admin expenses. So we have water and electricity. So let's go through them and see the ones that we have towards allow and disallow. Water and electricity, don't we allow? Allow or disallow?
Allow.
Allow. Office wages and salaries?
Allow.
Allow. Repairs to premises? Here we should look at note I. That one has a breakdown. Construction of main gate and landscaping. Should we allow? Construction of main gate and landscaping. Tax students. Should we allow? No.
No.
It's a capital allowance.
construction. Okay, okay, sorry. It's a
It's
capital
of
expense.
capital nature. It shouldn't be in the P&L. We must disallow. Minor office decoration is a maintenance expense. Allow. Replastering of damaged walls. It's just plastering. Allow. But this is a capital allowance item, right? Do you understand? Yes. So we come to motor expenses.
Yes.
They say we should look at the breakdown. Motor expenses. We have traveling expenses. Allow or disallow? Allow.
Allow.
Purchase of new engine.
Disallow.
Disallow because it's a capital expense, right? It's an expense of capital nature. It doesn't belong in the expenses. You have to add it back. Does it make sense? Are we learning something?
Yes.
Yes. So this is a capital item. Doesn't belong here. Fuel and lubricant.
Allow.
Okay. Do you understand? So when we come here, we have depreciation. We know this depreciation, we must what? Disallow, right?
Yes.
Okay. Loss on sale of equipment. In tax, we don't have gain or loss on sale of items. We only have capital gain, so disallow. Okay. Anytime you see a loss or gain on sale of an item in tax, always disallow. We don't have that in taxation. Professional charges, accounting and auditing fees. Allow, right? Cost of
Yes.
obtaining new lease to build an office complex. Cost of obtaining new lease to build an office complex.
Disallow.
Why? Why?
It's capital in nature.
It's capital in nature. Yes, that's good. Then we come to sundry expenses. Penalty for late filing of tax returns.
Disallow.
Disallow.
Donation to Ghana Education Trust Fund, confirmed by GRA.
Allow.
Allow. Postage and courier services.
Allow.
Allow. Fines for vehicle wrong parking.
Disallow.
Office
Disallow.
cleaning.
Allow.
Allow. Business operating permits paid to Ada District Assembly. Allow. Printing and stationery.
Allow.
Telephone and communication services.
Allow.
Allow. Yes. So they said reserve for unexpired risk is 45% of net insurance premium. Capital allowance for the years have been agreed at 65 for after consideration of all the available returns. So we don't need to calculate capital allowance. So this purchase of new engine and all those things, construction of main gates, we have to ignore because they've already given them to they've already given us the capital allowance. They understand.
Yeah.
Straightforward. So this is the question. So straightforward, we go and then we deal with it. But you see, unnamed commission agent, should we allow?
Yes.
Should we allow? Unnamed commission agent, should we allow?
No,
Unnamed
because we don't
commission-
know. We don't know
Yes.
who they are paying it to.
We don't know who they are paying it to. Unnamed. Why are they unnamed? What if they are fictitious? You created them ghost names. Does it make sense?
Yes.
Good. So straightforward. We already know the drill. What's the name of the company? Premier Insurance Company Limited, right? So we say what? Computation of chargeable income. For which year? For the 2024 year of assessment basis period from the 1st of the 1st, 2024 to the 31st of the 12th, 2024. So we're good to go. Did we have gross premium income? How much was our gross premium income? That was 380,000, right? Was that premiums returned?
Yes.
Was that premium returned?
Yes. 118,500.
Was there reinsurance premiums?
Yes.
126,000.
Okay, so this one we add the two, then we take it out. You see, this one they've even aligned everything for you. Or they had already done so. This was from March 2025. So 244,500. 244,500. So we take it out. Then what do we get as our net premium income? So 3,380,000 minus 244,500. That's 3,135,500. Okay. Now we come to our reserve for what? Our reserve for unexpired risk. So did we have some for the previous year? How much was the previous year reserve? In the question, they gave sum to us, right? So reserve for unexpired risk at 2023, how much was it?
910,000.
910,000. So we picked this 910,000. And then the current year, let's calculate the current year reserve, which we know is 45% of our net premium income, 3,135,500. So that gives us what? That's 1,410,975. So 1,410,975. We have 500,975. So 500,975, which would be a minus because this minus this is another minus. So this minus 3,135,500. You end up with what? 2,634,525. I hope we are all following. Please confirm the figure. So is it correct? So was there claims paid? Was there claims paid? How much was the claim settled?
I think it's 1,185,000.
Okay, 1,185,000. Okay. It's an expense, right? Was there reinsurance recoveries? Was there
Yes,
reinsurance recoveries?
24,000.
Okay. So 24,000. So how much do we get? That's 1,161,000, right? Okay. So in that case, what do we get then? That's 1,473,525. 525. Okay. So that is it. Then we come to our allowable what expenses or allowable deductions. So we only go and pick the allowable ones, right? Here you don't need to do any add backs because here you are building the whole account from scratch. Do you understand? If you like, you can add investment incomes before you come and less this, but it doesn't really matter. If it's an addition, you just add. So in that case, let's see. I'll start with commission to agent, right? So commission to agent, I'll just, if we say disallow, just take out the one that you don't need. So commission to agent, the unnamed one, we can't allow, right? So commission to agent, I'll take the total commission, which was how much? The total commission was how much? 271 what? 200, right? Then I'm going to less which one? The unnamed one, the 21,200 from it. Do you understand? Does it make sense to all of you? Yes, because that one is not real. Why are they not named? 21,200. So we have 250,000 as the commission paid to agents. So this one, we take it out. Then we come to general admin expenses. That one, we have a lot to deduct. So general admin expenses. So instead of bringing the total and taking out, you can just pick the ones that you want to, include. Water and electricity, 69,200 plus which one should be allowed again. You can add the ones that you want to include, right? Only those ones. That is also there. Do you understand? But let's take the total and take out the ones that we don't need. So the total general and admin expenses was 881 what? 881,900. Okay, 881,900. Then you can open bracket or do a separate note for it. So you can say general admin expenses working. Then you come to workings. Then you say what? General admin expenses. Do you get it? Because sometimes the brackets will be very big. So you just say general admin expenses. Then you do a breakdown. Then you say Ghana city. Then you say per question, right? per question or per financial statement, right? You say per financial statement. So per financial statement, how much was it? 881 what? 900. Then you less what? You less the disallowed part, disallowed expenses, right? Disallowed expenses. So under it, we have what? Repair to premises are inside, then motor expenses, depreciation. So I'll take out the depreciation from it. So the depreciation was what? 56 what? 800. Doesn't belong here, right? Good. Then we have what? Loss on sale of equipment. Doesn't also belong here. 20 what? 640. And also so. It doesn't belong here. Then construction of main gate, right? Are you getting the style? You see, this one is also very good because you make a separate note for it. So 86,360 doesn't belong here. Take it out. Then we have purchase of vehicle engine, right? That one too doesn't belong there. You have to also take it out. Does it make sense? Did we all get it? So purchase of vehicle engine, 35,000 doesn't also belong there. So 35,000. So we have to take it out. Are we cool? I think these were all, right? So this one becomes the allowable admin expenses. So we take out our 881,900 minus 56,800 minus 26,40 minus 86,360 minus 35,000. You see this one, if we open bracket, it would have been very long to get it. So we have 683,100, 683,100 as our note. So we come here and just bring us 683,100. You get the idea? I hope that style 2 is not bad. I hope that style 2 is not bad.
Yes, sir.
Yes.
Yeah, so that is what we have. These were the only expenses, general admin. Okay, so we just come and then add it, subtract it. So we have 250,000 plus this 933,100. So we end up with 933,100. So allowable deductions, right? We take it out. So we have 1473525 minus our 933,100. That's 540,425. So we have 540,425. Okay, so once we have this, we are now going to add investment income or other income. So investment income. So investment income, what investment income did we have? So I believe investment income, we have interest on bank deposits. We have gross income from insurance consultancy services rendered. We have dividend received net. So that one, final tax, right? They've already taxed it. The interest to, they've already taxed it. So interest on bank deposits. Interest on bank deposits. So interest on bank deposits, right? Interest on bank deposits. So interest on bank deposits, it was net. We need to gross. Remember, interest withholding tax on it is 8%, right? So if I'm paying you, look, if I'm paying you 100, okay, any figure you always have is 100%. So if I'm paying you 100%, okay, and I already took 8% from it, that means the net is what? 92%. True or false?
True.
True or false?
True.
But because it's on account or it's non-final, we have to include the whole 100%. So in that case, I have to gross it up. I need a gross interest. So gross interest means I need 100. So 100 out of the 92 times the figure that they've given you. Because you are saying that if 92% was equal to what? The 418,000, then how much would 100% be? It would be more. So if more, let's divide. So it becomes 100 out of 92 times the 418,000. Does it make sense to everyone?
Yes.
Yes, this question is not difficult, but it can waste your time. Like, so you need to speed up. So 100 out of 92 times the 418,000. So that gives us what? 454,348, right? So this is 454,348. Okay, so that is it. Then we have what? Gross consultancy income, right? So gross consultancy income. So instead of investment, we can say other income. So gross consultancy income from insurance consultancy services. That was 350,000. It was already gross, right? So I add it up. Dividend was net. Can't come. It's only these ones. Oh, there was another interest, right? Oh, it's only this. There wasn't any other interest. So this figure plus 350,000, and that's 804,348. 804,348, right? So add this up, and that gives me my total chargeable income. So this figure plus 50540,425. That is 1,344,772. So 1,344,772. Okay. Or 773, if I may. Yeah, 773. Okay, so now I need the tax liability of this company. So first, I need my tax on chargeable income. So let me get my tax on chargeable income. So tax on chargeable income. We forgot one expense. Nobody reminded me. Capital allowance. Oh. You see, even though I'm the one solving, your mind needs to be here. You need to also be giving me where you need to be going through, right? Looking for lags, mistakes. That is it. That's your part to play. All right. So capital allowance was 65,400. See, we forgot it. So how much does that become? So 250,000 plus 683,100 plus 65,400. That's 998,500. 998,500, right? So I'm taking it out. So 1,473,525 minus 998,500. That's 4,750,25. 4,750,25. 4,750,25. So this one, we are now going to add our 804,348 to it. And then we get 1,279,373. 1,279,373. 1,279,373. Okay, so tax on chargeable income, we can just have what? 25% of the 1,279,373, right? So that gives us what? 319,843. Okay, we are not done. We have to less tax credit, right? We have to less withholding tax credit. So withholding tax credit, we have different, right? We have the withholding tax on the interest, which we calculated here as 454,348, right? So 8% of the gross amount of the 454,348. Was it not 348? Yes, 454,348. And then we have withholding tax on the consultancy fee, right? So consultancy is a service. So service fee, 7.5 of the consultancy fee. And consultancy was 350,000. Right. So we have 8% of 454,348. And that's 36,348. This gives us 36,348. Then this one too was 7.5 by 350,000. And that gives us 26,250. 26,250. So we have 319,843 minus 36,348 minus 26,250. That gives us 257,245. 257,245. That's the net tax payable to GRE. Okay, so that is it. Then there were other taxes. So we just get our other taxes. So we need what? Withholding tax on dividends. Withholding tax on dividend. And the dividend was already net, I presume. Yes. So they've already taken out the tax. But I can say, okay, dividend is 8 out of the 92 times 341,000. It was 341,000. So that I only get the dividend portion. There's no need to gross it up. It's ratios. So 8 out of 92 times 341,000 for the dividend received. So the dividend that was paid was actually 29,652. 29,652. So you are done with the question. So practice more. Look for past questions on insurance and practice. This one came from March 2025, question 1B. So we are done with taxation of insurance businesses. I hope it wasn't a bad experience at all.
At all, at all.
All right. So
Good morning,
Sunday
Prof.
mornings, I'll be meeting you for advanced taxation, right? Every Sunday morning. Some of the sessions I'm the one who will be taking in something like sometimes I'll meet you for public sector, sometimes advanced audit and assurance, sometimes taxation, sometimes corporate reporting, all the courses. Some of them I'll be the one taking it myself. So I'll see you in our next session. So on Tuesday, I believe Musa will take you through tax administration, right? So most of the computations I'll be doing it and some of the tax planning issues, right? So I'll see you in our next session. Have a good Sunday.
Thank you, Prof. Good morning, Prof.
The video is on the YouTube, right? On the YouTube channel. Just go to Prof Training Solutions on YouTube, subscribe, and then go to the live tab. You'll see it there. I'm streaming it live right now. All right.